Hello, in this presentation we will define customized production. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of customized production is production of special order products, also called job order production. When considering the term special or customized production, we're typically thinking about a company which manufactures inventory. The process of having raw material which is then transferred and conformed to finished goods being the manufacturing company, and there typically are two ways we can track that inventory. One, the job cost system. Two, a process cost system. When we're thinking about customized production, we are typically thinking about a job cost system. Reason being is that a job cost system is usually applied when the types of inventory are different in nature and usually costlier in nature. So if we have production which is customized, typically we're going to have units of inventory which are not the same that are being produced, and therefore we're going to track those with a job cost system as opposed to a process cost system, a system which could look something like this, where we have the trial balance accounts and the inventory within those trial balance accounts broken out by component of inventory, including raw materials inventory, work in process inventory, finished goods inventory, factory overhead. The process, as we could imagine, would be raw materials, then going to either work in process and or finished good accounts, which ultimately end up in the inventory account of finished goods being that inventory account which is ready for sale. And once it is sold, the expense side, the inventory of finished goods reducing and increasing the expense of cost of goods sold at the time of sale. Like any account, these inventory accounts will be backed up and supported by general ledger accounts. For example, we have raw materials, finished goods, work in process, factory overhead, general ledger accounts in order by date of transaction, and the total in the general ledger accounts equaling what is on the trial balance. For example, the raw materials general ledger is at $170,000, which of course is the same number on the trial balance, $170,000 within raw materials. Likewise, finished goods, work in process, factory overhead, same concept. Problem being that the general ledger account does not track this information by job, by unit. And because the units are not the same, we need some way to transfer those costs from work in process to finished goods to cost of goods sold. We need to know when we transfer a particular job, which costs are related to those jobs. Therefore, we need something of a job cost system, job cost sheets, which could look something like this. In this example, we've got job 14, job 15, job 16. We have the costs related to those jobs, including, remember, this is the production of inventory, which includes material costs, labor costs, overhead costs, and that will give us the total costs that then we can transfer through the production process between the work in process to finished goods and ultimately to cost of goods sold. In this example, the job 16, only job that is open, adding up to total cost of $260,000, that number being the same as the number on the trial balance and the general ledger for work in process. Other two jobs which are closed, represented by the closed item here, are going to be included and part of the finished goods number here, those jobs being ready for sale, ready to be moved at the time of sale to the expense account of cost of goods sold.